You're listening to Real Facts on Real Estate with Sean Patrick Maloney.
This sounds good.
Welcome to episode 11, VA Loan Myth Busting. I'm Sean Patrick Maloney, your host. I'm here with Patrick Queally of Hancock Mortgage Partners out of Rockland, Massachusetts. Thanks for joining us today, Patrick.
Thank you very much for the invite. Great to be here.
One of the subjects that agents always have questions about is the VA loan. There's a lot of different myths out there. There's a lot of facts. There's a lot of fiction. Everybody's having trouble sorting out in between. So today on this episode, I really want to help agents understand how to better utilize the fact that over $1 billion of VA loans were generated last year, and it's a growing marketplace, so I want to help them learn more about them. Can you start by telling me a little bit about who can actually use a VA loan and what is a VA loan?
Sure. So a VA loan is a loan that certain classes of people are eligible for. So typically a veteran. But it goes a little bit beyond that. So there are some certain criteria that's required by that veteran. So the veteran has to have served either 90 days, consecutive days, so 90 days consecutively during time of war, or 181 days during peacetime in service. Okay, and that's any of the branches of military. However, if you're in the reserves or National Guard, 6 years worth of service is required. Now, one of the other pieces to the puzzle that most people are not aware of is that the surviving spouse of a deceased veteran may be eligible for VA financing, so long as that surviving spouse is not remarried and their spouse died in connection with their service. So a service-related disability, or they were killed in action, something like that. So it's one of the things that I try to push out there as much as I can. The surviving spouse may be eligible for VA financing. It's just something that most people are not aware of.
Yeah, that's a very interesting fact. I actually didn't know that one, and I can imagine that there might be a large number of these spouses out there that didn't know that they qualify as well. So that's a great one to bring to my attention. One of the next questions I want to ask is, what would you consider the main benefits of using a VA loan? I know there's a lot of benefits involved, but what would be the big to-dos?
Well, in the circles that I travel in with loan officers that serve veterans, it's kind of using the word benefit sort of has a different connotation. I really like to refer to it as an entitlement. It's a benefit, but they're entitled to it based on the service they've provided to this country. So one of the things that they are entitled to is to purchase a home with zero down payment. So they can get into that home without reaching into their pocket to give any amount for a down payment. And really, as a benefit or an entitlement, that's a trade-off. They gave their down payment when they signed that enlistment papers. They basically signed a blank check to the U.S. government and the citizens of the U.S. to defend the country. And being eligible to purchase a home with no down payment, I think is really just a small reward or small token of appreciation to give back to that veteran. So one of the biggest benefits or entitlements is 100% financing. And different from other loan programs, VA loans do not require mortgage insurance, private mortgage insurance. With every other loan type that's out there, if you're putting less than 20% down, the lender's going to require PMI, private mortgage insurance. VA loans do not require PMI, so you can get 100% financing, and your payment breaks down principal and interest, real estate taxes, and homeowners insurance, and that's it.
Excellent. On that one, I got a question, just thought of it off the cuff here. When a person goes with a true zero down as a VA guy, or a 10% or 20% down, will that greatly influence or change the number on the overall pre-approval?
Well, the amount that a veteran is eligible for on a VA loan is a little bit different than what it is on a conventional loan. So just a quick side note. So even though a veteran is entitled to 100% financing, there are still many veterans that still give a down payment. So whether it be their own sense of, wanting to contribute towards a transaction, whether it be better management of their overall monthly payments and budget, there are many veterans that still do give a down payment. So it's not a case where every veteran always takes 100% financing. But if that that veteran, when they're looking to qualify, there are expenses similar to other loan programs that are looked at. Look at your credit report. What's your auto loans, student loans, credit card payments? But there's another piece of the puzzle that is unique to VA loans, which is childcare expense. So, having children, and for many working adults, having to put those children into daycare or some other, babysitting or, while you're at work, can be a significant expense. So on the VA loan, that's taken into account as part of the veteran buyer's expenses. What's also taken into account is the utility expenses on that home. Now, these extra expenses, when it comes to qualifying for a loan, may sound like it's more difficult to qualify for VA financing, but nothing could be further from the truth. The VA has a mission to help as many veterans as possible achieve the dream of home ownership. So when they're doing that, they're taking every step possible to make sure that that veteran is not only going to qualify for the home, but they're going to keep it. They're going to stay in the home. They're not going to run into financial difficulty like, many other borrowers in different loan programs do. So VA loans actually have the lowest delinquency rate of any loan program across the country. So from a lender or a loan servicer's standpoint, a VA loan is a highly sought after mortgage product to have in their portfolio.
Wow, that's impressive.
Yeah, so we meandered a little bit there, so I'm not sure if I answered the question.
No, that's great. I think that the listeners will really enjoy learning these extra facts, and it's an amazing fact that even though they're doing zero down, that they have the lowest delinquency rate, which shows you that they're actually a strong buyer, which is a great opportunity. One of the other questions, and I'm going to jump ahead on the questions and come back, is I was originally going to ask it later, but I think since we're talking money right now, it makes sense. With the word deposit, down payment, and then we have the closing costs, a lot of people use them interchangeably. So deposit-wise, from what I understand of a VA loan, you do not need to put a deposit down, but it can strengthen the offer. And at the time that the deal closes, you can get a return check for any deposit used above and beyond your intended down payment.
Yeah, so certainly don't want to practice law without a license here, but my understanding of a contract is there is some consideration that is required. So if a veteran is going to be purchasing a home, signing that purchase and sales agreement, they have to give some sort of monetary compensation, to make that a valid contract. So the way that most VA loans are structured, in my experience, is that either a 3% or 5% of the purchase price is given as a down payment, or a deposit rather, as a deposit when signing that purchase and sales agreement. The real estate agents hold that in escrow like they would with any other transaction. And when it comes time to reach the closing table, because that veteran is getting 100% financing, that 3% or 5% deposit the agent was holding comes back to the veteran, which then they apply towards their settlement charges. So, there's a yes and no answer in there. So while no down payment is required, most of the times, and again, to make the seller feel comfortable too, that there's skin in the game, the veteran has some money, on the table. There's a potential financial loss if they don't perform. I can understand that from the seller's standpoint, but the agent will hold that deposit until you get to the closing table.
Excellent. And closing costs and settlement charges, VA versus traditional loan, pretty similar, different?
Similar. Many lenders, myself included, will waive a number of fees for that veteran buyer. So there are, appraisal, credit report, attorney, recording at the registry of deeds, all of those fees. But many lenders that are veteran-centric, that really have a mission to serve the veterans, are going to waive any processing or underwriting fees just to help that veteran get into that home with a little bit less out of pocket.
Excellent. So overall, what do you think the most important thing for agents to explain to sellers to have them understand about a VA loan?
Yeah, so one of the biggest misconceptions out there revolves around that 100% financing. So from a seller's perspective, and a lot of times from an agent's perspective, it's deemed to be a weak offer or a weak buyer because they're financing 100% of the purchase price. The buyer is viewed as not having enough funds for a down payment. A seller may think, well, hey, I saved for 2 years, 3 years to save up enough money for a down payment on my first home. What's wrong with this guy or gal that they can't come up with money for a down payment? But understand, it's something they're entitled to based on the years of service. Okay, so 100% financing does not mean it's a weak offer. So when you lay the numbers side by side, the veteran buyer is actually much more well qualified than their civilian counterparts. On average, put the numbers side by side, the veteran has a higher credit score, has a higher income, has more assets, but because the VA loan program allows them not to give a down payment, many veterans will elect to hold on to that cash, keep it in their pocket, maybe to make improvements after closing or just shore up their financial reserves. So when you take a look at a civilian versus a veteran buyer, the national averages, the stats prove that the veteran is much more well qualified because they have that higher income, they have a higher credit score, and they actually do have funds for a down payment.
And I can understand that because honestly, we all know the cheapest money borrowed is money borrowed on the home, and that's why people pull home equity line of credits and different things like that. So if you had the entitlement of 0% down, even if you had money, why wouldn't you leave it as a safety net for a future payment versus having it be out on the gone and you can't get it back?
It's, the VA offers financing terms that us civilians can only dream about. I'd love to be able to purchase a home with 0% down, but I'm not a veteran, so that's not an option for me.
Excellent. So overall, when we're talking VA loans versus conventional loans versus FHA loans and everything, they're all, at the end of the day, pretty similar when you look at them. When it comes to, if somebody's pre-approved, you shouldn't look at it as any different than another pre-approval, other than the fact that you should always check in with the lender to make sure of the pre-approvals.
Yeah. So the pre-approval is only as good as the loan officer that's issuing it. Okay, so one of the other pieces with the VA loan, one very extremely important piece of documentation is a document issued by the VA called the Certificate of Eligibility, COE. So the COE is essentially the holy grail when it comes to processing a VA offer. That is a document that is issued by the Department of Veterans Affairs to the veteran, and on one page it clearly spells out whether or not that veteran is eligible for VA financing. It also outlines some of the other terms under which they can receive a VA loan. So for example, if they have a service-related disability, they can receive a discounted or entirely waived funding fee. So instead of PMI, which we talked about earlier, private mortgage insurance, VA charges something called a funding fee. Okay, so the funding fee is essentially, in lieu of PMI, it goes into a fund. So every veteran that purchases a home, with some exceptions, which I'm about to get into, every veteran that purchases a home pays into that funding fee. Now, most veterans can actually finance that. You can roll it into the loan amount. So sometimes that's where you see on a pre-approval or commitment letter, the dollar amount of the loan is actually more than what the purchase price of the home is. That's because the veteran's rolling in the funding fee. So what the funding fee does, it goes into a pool that is essentially an insurance pool. If there are any VA loans that do go into default, every veteran is paying into that as an insurance pool for the lender to help out their fellow veterans if, in fact, they do face a foreclosure. Now, the funding fee is waived if the veteran has a 10% or more service-related disability rating. So jumping back to that certificate of eligibility, that is the document that proves or clearly states whether or not the veteran is exempt from paying that funding fee or if they are required to pay it.
Excellent. That sounds like
so a lot of technicals in there.
It sounds like a really important document. And one of my understandings over the years of doing this is that a person has the eligibility credit of only one loan at any given time on the VA. False. Okay.
So you actually can have multiple VA loans outstanding at the same time. However, one of the things that VA, Department of Veteran Affairs, the VA does, is they provide a guarantee to the lender. So if in fact that loan goes into default, the VA is helping that lender out by paying them a certain portion of whatever loss they may sustain. Okay. So the VA's guarantee is 25% of the loan amount. Now, there are dollar amount limitations on how much of a guarantee can be outstanding at any given time. Okay. So standard across the country, the standard loan amount is $144,000, of which the VA will guarantee 25%. However, in higher cost areas such as Massachusetts, there's something called bonus entitlement, where the VA will guarantee a higher dollar amount. So in order to have multiple VA loans outstanding at the same time, it really depends on what part of the country you're in and how much of that entitlement you have already used.
Oh, okay, that makes sense. So up here, it's going to be a higher one, whereas in maybe in the Midwest or somewhere you can get less expensive housing, you may be able to do a little bit more with it.
Correct.
Excellent. One of the next questions I have, and you had kind of alluded to it at the beginning with the 6 years at the National Guard. One branch I am not sure where it stands would be the Coast Guard. Are Coast Guard guys, are they Guard guys, are they VA guys? Where do they sit on that
Absolutely.
list?
So the Coast Guard service members in the Coast Guard absolutely are eligible for the VA home loan program.
I feel bad for those guys a lot of times because we always talk National Guard, Army, Marine Corps, Navy, Air Force. Everybody always throws them out, but there's guys and gals out on the coast all day long making sure we're safe from incoming things, everything from immigrants to drugs to all different bad
100%.
things. So.
I actually have a couple clients I'm working with right now that are based in Boston working for the Coast Guard, and we'll help them out with mortgage financing. So 100%, yes, they are eligible.
Yeah, we have several Coast Guard locations throughout Massachusetts, being a coastal community and having a big fishing village and everything. So imagine there's a lot of them out there. So it's really important for agents to know that these are all opportunities and that, we the agents owe them the service of helping them by better understanding what they have available, because sometimes if you don't know as an agent what someone has available, you may actually do them a disservice and not be the true fiduciary that you're agreeing to be for them.
Yeah, correct. I see it happen, and it really upsets me when an agent that doesn't know or doesn't understand how the VA program works is going to try and counsel a veteran and advise them that they'd be better off taking a VA loan or a conventional loan with some down payment, where the VA offers some, I don't want to say perks, but definitely more flexibility when it comes to underwriting guidelines to get them to the closing table. And typically, the VA loan program is actually going to come at lower interest rates as well. And the fact that the veteran does not need to pay PMI is also going to benefit them with a lower overall payment.
Yeah, so let's be honest, one of the reasons I think agents do that is the fear of what they call the VA inspection, wrongfully so, because it's not a VA inspection, it is a VA appraisal. And can you tell me a little bit more about, as an agent, what is it that I'm concerned about? What should I be looking for at first to vet, as well as what should I be a little more laxed on instead of trying to rule something out? And last but not least in this question, it's a big question, what is the vet allowed to pay for out of these items if, God forbid, something comes up? Where does it go from there?
Yeah, so the appraisal is a hot topic, and we can go down a whole bunch of different paths here. So the VA appraisal, so you use the word inspection. So let's clarify here. So similar to a conventional loan or an FHA loan or USDA, any loan product is going to require an appraisal be performed. So the VA appraisal is not all that different from any other loan product. It's a appraiser that is licensed by the VA. So in every state, there's only a certain number of VA licensed appraisers. And some of the requirements when it comes to VA loans, may shock you. So the VA appraiser has a mandated turn time by which they need to contact that listing agent or whoever the contact is to set the inspection. And they have a mandated turn time as to how quickly they need to turn around that report and deliver it to the lender that has ordered it. Okay, so many people make the complaint, well, VA appraisals just take too long. Nothing's further from the truth. they have mandated turn times that they have to adhere to. One of the other topics I hear when it comes to appraisals is condition items. Okay, so I think you had mentioned that there. The condition of the home, that's certainly important. It's important in any loan product. Now, for a VA loan, there are some specific requirements. Typically, what I see is very similar to an FHA loan. If there's any chipping or peeling paint, interior or exterior, that's going to need to be addressed. Typically, safety issues. So while it's not a hard and fast rule, the general rule of thumb is if there's a stairway with 3 or more steps and there's no handrail, a appraiser, VA or FHA, is going to call that out as a potential safety concern.
If you don't mind, I'm just going to jump in really quick. I noticed that you said FHA and VA, so it would be safe to say that the VAs are getting an unfair disadvantage when people are saying, oh, geez, it's a VA loan, and they have other FHA loans. They are both subject to these conditions.
Exactly. So if it's not going to pass, an FHA inspection or conventional inspection, it's not going to pass a VA inspection. It's not. So VA appraisals are not set at some lofty, unreachable standard. They're pretty much the same standards. The appraiser is looking at the condition of the home and is also looking for safety concerns. Now, we do have a list here, which I'm going to share with you in your brokerage, of all the bullet point items of what an agent needs to be aware of if there is a VA offer that's coming in. Now, one of the other really, really important points that most people don't understand and flat out just don't know about when it comes to a VA loan is there are multiple points in the process where you can legitimately influence the value of a VA loan, a VA loan appraisal. So one of the other concerns that's out there, in addition to the timeline that it takes, the condition of the home, is also the appraised value. There are a lot of agents, I've heard the complaints over and over again, well, a VA appraisal is never going to come into value. It's just not true, okay? So there are several points in the process where you can legitimately influence that value. So number one is something that's called Tidewater. Have you ever heard of Tidewater?
I'm not familiar.
Okay, so a lot of people in this area hear the term Tidewater and they think it has something to do with flood insurance. It's nothing to do with flood insurance, nothing to do with anywhere being near the water. When a VA appraiser invokes Tidewater, they're going to call the contact person for that appraisal, typically the listing agent, and they're going to use that term. They're invoking Tidewater. Now, typically the listing agent has no idea what that means. They have, the property's not near the water. They think it's some sort of flood insurance deal, and they simply ignore it. So here's what Tidewater is. If a VA appraiser is having difficulty reaching a conclusion of value that matches that purchase price, they're going to invoke Tidewater. What that means is they're reaching out to everybody asking for help. Hey, I can't quite meet that, $350,000 value that's on the purchase and sales agreement. Please give me some additional comps, give me some additional information, help me reach that conclusion of value.
Oh, wow, that's interesting.
And there's a time limit. So once Tidewater is invoked, you only have 48 hours in which to provide that information to the appraiser. If the appraiser doesn't get that information, they are required to finish that report, reach that conclusion of value, and issue the report. But that's not the end of the story. If that conclusion of value is still coming in low or lower than the purchase price, anybody that has an interest in the transaction, so whether that be the lender, the buyer, the seller, the agents, they can request a revision to that by contacting the RLC, the Regional Lending Center. So for this area, that is Cleveland. And the term that is used, it's called an ROV, reconsideration of value. And it's somewhat similar to an appraisal rebuttal on a conventional loan, where if we miss the window on Tidewater, we can provide that additional comps, that additional supporting information to the RLC with that appraisal report and request a reconsideration of value.
Oh, wow. Yeah, so as a list agent anyways, you should have comps available and you should be ready to always back up why you, or justify why you chose a certain price. So Actually seems like they give you a lot of opportunity to do so, and different avenues to reach out and make sure that the value is justified.
Exactly. I mean, if the listing agent has done their job and priced the home appropriately for the marketplace and the condition, there is really no reason why that appraisal should come in low. Again, we have multiple opportunities to influence that appraiser's decision.
Excellent. Well, I think we went over a lot of information here. I'm sure we got miles more to go. But for future reference, Patrick, how would someone get a hold of you?
Typically, the best way is just to call my cell phone. So that is 781-888-5678. Just give me a call, give me a text, especially if you're a veteran. Thank you for your service. And one of the phrases that I use a lot is proudly serving those who served. Be more than happy to hear from you and help you out with your VA financing.
As my listeners know, I'm always looking to give more information on how to be a better agent on this podcast. If you have any future questions, comments, concerns, feel free to email me, call me, message me online. Any form of communication is great. Make sure to follow the podcast, and we look forward to talking to you next week. Have a great week. Thanks for coming in, Patrick. We really appreciate all the info.
Appreciate the opportunity. Thank you.